What is the character of this pullback? You have the advantage of Kathy and Lizanne to give you perspective as well. What is the nature of the pullback we've seen, Omar?
Well, good morning, Tom. Definitely is that out of my range of understanding a lot of the discussion regarding celebrities, but I can tell you, though, that a big part of what the market is going through now is something that, in a way, shouldn't be coming as a surprise as we come out of the summer and such an amazing run in the market. We clearly speculated what could be the fall look like. And if you actually see all the sources of uncertainty we had and the gap between the market and the economy getting bigger and bigger, that all of a sudden created that environment for a potential volatility. And what we are observing right here, you put it into the context of the size of the rally that we have seen since April, we're just seeing volatility. The size of the correction, even though in the NASDAQ has significant, is still very small relative to the size of the bull market we saw earlier in the year.
Omar, a really serious question, and I don't want you to speak for the executives of Schwab and Mr. Schwab as well. He can do that for himself. Schwab and others in retail electronic brokerage have been piñatas about the sizable retail trading we're seeing. Do you buy that idea that there's something ill about all that retail trading?
Well, our job at Schwab is always to guide retail investors to find their best way to trade, and in many cases to find, the opportunities they find in the market so that they can use their capital in the wise way. Of course, there's a lot of players in the market. There's a lot of activity in the market, and the size of the retail trading, especially the high frequency retail trading, has had an impact in the market, no question about it. Now, I think a big part of the discussion of what we do at investment management part of Schwab, it also involves, trying to guide them into the behavioral aspects of the market. If you actually see a lot of the retail activity, it usually tends to be very short-term in nature, and in many cases tends to be fairly related to behavioral economics. So we do a lot of research, and we provide a lot of advice to our retail clients to try to guide them to understand what is really the motivation behind a lot of the trading. Is it really more for a short-term trade? Is it really more consistent with their investment objectives?
Well, Omar, you mentioned two things there. One on size, the volume clearly increased over the last 6 months on the retail side. The other on the character of the trading. Can you talk a little bit more about that, whether you've seen a shift to more short-term than perhaps it was 12 months ago, whether you've seen a shift from just the underlying stock to more options activity, which is a big discussion in the last week or so. Can you give us some color, some clarity there, Omar?
Well, I think the market environment has actually put, clients and in general, investors in like two camps. And you can actually very clearly see through the activity that we see in the market. On one hand, we have what is called in behavioral finance the overconfident crowd, that is a cognitive bias that basically feels that clearly short-term trading, it is the place to go, mostly because central banks provide that extra liquidity and backstop for the market to continue to follow that trade. You can actually see that more in options. You can see that more in just the momentum trade. You can actually see, and you can obviously think about all the different participants that are trading on and off regarding those short-term, components. On the other hand, and we see that more and more often, we actually see more of the other side of the trade, which is some of those, investors that tend to be more risk averse, where loss aversion, which is more of an emotional bias in behavioral economics, that tend to actually drive more and trying to be more safe and try to put more cash on the sidelines and looking for protection. So when you think about options, it's both ways. It basically allows for you to put money to work in the market to try to put, your views, but also to try to seek protection. So we actually see, basically a bifurcation in terms of the way that activity goes. One is more short-term in nature. The other one tends to be more long-term in nature.
So does this all balance itself out and keep the rotation into cyclicals intact despite the tech sell-off? Or are we going to basically be set back, and is tech going to regain the helm and everything else going to kind of limp along for a while?
Well, I've always, described this in just the theory of economics that basically say when you look at history of recessions, normally the market takes off before the recession is finally completed. But in one thing that has been common in all the prior recessions is that the source of the recession gets resolved before you start seeing the rotation from growth to value. Even though the market can continue to go up, you actually see the rotation, into value from growth, and that's very typical of most of the recessions. What is unique about this one is that this looks more as a recession that comes from a natural disaster more than an economic, driven, recession. And the reality, though, is that the majority of the natural disaster recessions, they are actually solved because the natural disaster is gone. In this particular one, we have not resolved the source of the recession. We're still trying to figure it out, and therefore it's going to be very hard, Lisa, to basically think about a serious rotation until we actually have or get to the source of that, solution for the recession source.
Omar, tight on time. Just a quick one from me. Clearly, there's many people that still haven't gone back to the office. Have you got any basic assumptions on what happens to volume with guys like yourself right now once people start going back to the office again?
Well, it's actually quite interesting, John, because what we actually think is that there is a significant amount of people that are actually more comfortable trading from home. And in fact, a lot of the activity in terms of day trading tends to be more often of people that now have more time to actually be trading at home. So we don't necessarily anticipate to see any significant change in terms of how the different activity within trading will actually happen. Of course, it's all speculation. When we think about the bigger players, people obviously like on the asset management side, we obviously all are working from home, and therefore that is not going to make any difference in terms of how we operate. Now, in terms of retail clients and in terms of others, clearly, the advantage that they have in terms of their technology that is provided by different, providers is there. So it is unclear to me that there will be a significant change in the volume that we see, and we see a significant pickup in volume already.